So first of all, thanks a lot for joining our webinar. Very excited to talk to you about what trends we are seeing in MENA e-commerce. A brief introduction about us. So my name is Sandeep. I've been in the region since 20 years. I lead Redseer's Middle East practice. And with me is Akshay. Akshay leads the retail practice for us and the deal advisory practice. Akshay, maybe you want to quickly introduce?
Sure. So I've been in the region for 4 years now. Prior to that, I've been looking at the retail and e-commerce market in Southeast Asia, India. So I have a bit of experience across emerging markets. Yeah, it's a quick intro. Yeah.
Cool. Akshay, are we changing the slides?
Yes. So let me.
Yeah. So on a very quick introduction on what we do. So many of you would know us, but I'll keep it very short. So we do a lot of transaction advisory work, IPOs, due diligences, consumer due diligences, vendor due diligences. We also do growth strategy engagements. A lot of our work is helping companies navigate how to grow in new markets, new sectors, new consumer segments. And increasingly, the third element, which is bringing cost and efficiency, is becoming important, where we help companies on retainers to help transform their cost structure and grow profitably. All this is fundamentally based on our benchmarks product. So this is a product that where we track the market very closely on what's happening, and hence we typically have a very deep understanding of the sectors that we cover. Moving on. So based on this, we also have done a lot of reports. So if you are subscribed to our newsletter, you would have seen our reports. If you are on our LinkedIn handle, you would typically see these reports, which are available on our website also. Now, our benchmarks product, which is what the webinar is also based on, right? This product typically includes 3 modules: market, competitive benchmarking on market shares, and then financial and operational KPIs for unit economics. The particular topic today is online retail. So we'll be primarily talking on online fashion, home, electronics, grocery, etc. Now, coming back to the main topic, right? Today we wanted to cover 3 main areas, right? The first one, we wanted to show how digital has been an important driver for growth for the region, right? And when I say region, typically I talk of Middle East, right? That's what this session is about. The second topic we wanted to cover is how our online retail in our region has been very different than what we see in other markets. And the last one that we wanted to cover was what were the growth drivers historically, and what are the new growth drivers. What we believe is that what got us here will not take us to the next phase of growth that we are entering. So we wanted to paint a picture of what the new growth drivers would be and what opportunities are emerging from those growth drivers. So let's dig into the first one, digital being the primary driver. See, if you look at the consumer spending of the region, it's 1.6 trillion. Of that, only 10% is digital at this point of time, which is 160 billion. But over the last 5 years, if you look at the growth of consumer spending, it has gone from 1.2 trillion to 1.5 trillion. But 20% of the growth, which is almost 100 billion, is coming from digital. So digital has been a primary driver, 2x. It contributes 2x compared to its size of the consumer spending. So a big driver. What has been the driver within digital? The first one, if you look at sectors, the 2 sectors that stand out from a growth perspective, not size perspective, are online retail and food delivery. These are the 2 sectors that have been driving the growth. In terms of countries, the driver has been UAE and KSA. And to some extent, now we are seeing momentum in Egypt also. From a business model perspective, the key drivers have been aggregators and quick commerce. And the most important, I would say, is 70 million new internet users were added in online, right? So majority of the growth, 70-80% of the growth in the last 5 years was acquisition driven. That means you had to spend a lot on marketing, and you had to spend a lot of platforms had to spend a lot on marketing to get customers. So acquisition was the main driver of growth, and that has led to significant digital adoption in the region. Now, the 160 trillion digital economy, the two main components of that are online retail and online travel. For this is the last 2 years. 2 years ago, travel used to be the largest online travel. Now retail has overtaken travel. So retail is the largest, online retail is the largest sector of the digital economy at 31%. And it is only 9% penetrated. So the headroom for growth is very high, we believe, at this point. While online retail, online travel is already 65% penetrated. So it is at an equilibrium where we don't, where the OTAs already dominate the sector. So while in retail, the offline players are still much larger, capturing 91% of the overall share. In terms of other sectors, bill payments and food tech, food delivery, as I was saying earlier, are the two largest sectors that contribute to the other category. Now, before we go into delve deeper into the online retail category, I think there are macro trends we believe on the retail sector itself. Right? The retail sector currently is around $500 billion. 9% of it is online, but it is expected to grow at a very healthy pace of 6%. And if you compare the growth of 6% retail over the next 5 years to the growth expected in other geographies like US, UK, the larger economies, Germany, Canada, the average growth apart from China and India, MENA is expected to grow faster than all the other large economies. Right? And if you take an average, the average retail growth globally is expected to be 4%, while MENA is expected to grow 50% faster at 6%. That means that there are a lot of tailwinds to the sector, and this is very visible in all the global brands now entering the region. Right? We have JD Sports entering, Primark entering, Cornelius coming direct, Ulta Beauty looking to enter, and many more. So, and it's no longer UAE where they are entering. These brands are entering from other. I mean, Riyadh has become a place of entry. For Primark, Kuwait was a port of entry because Al Shaya was the Al Shaya got it here. So it's no longer UAE only, and the place of entry is also distributed. With that, now let's talk of the next trend, which is the most online, how online retail is very different in our region compared to other parts of the world.
Great. So this is a very interesting section where we highlight a few of the key differences when you look at the online retail market in our region versus other global benchmarks. So the first bit is in terms of the category mix itself. So generally, when you look at online retail, typically it's always electronics, which is the category that starts off online adoption. The fact that it's a very standardized category and also very brand driven makes it very easy for customers to start shopping for electronics online. And in most markets, most emerging markets that we look at, electronics accounts for the lion's share of online retail. But ours is a very different market. It's fashion first, as you can see in the case of UAE and KSA, which we have kept as examples over here. So we have fashion, which is the top contributing category to online retail. And the category mix is also a lot more distributed than what you see in a lot of the other markets. The second interesting facet about our region's online retail market is the contribution of CBT. Now, looking at the share over here, some of you might think that the number seems a bit lower than what we used to see over the years. So CBT has always been quite a sizable contributor to online retail in our region, but recently the share has been going down. And just to clarify, what we include as CBT is shipments that originate internationally. If a cross-border player has a local warehouse with which it's fulfilling the orders, then it doesn't count as CBT in our definition, right? So CBT is quite sizable and it's around close to 20% at an overall level in online retail in our region. But when you look at categories like fashion, the number is as high as 30%. So it's quite sizable and it's a growing segment. One interesting dynamic within CBT, as I was mentioning earlier, also is that the major CBT players are establishing local warehousing. So you have Trendyol, who has a local warehouse in UAE and in Saudi. Shein has set up a local warehouse in UAE. So a big share of their fulfillment is now happening locally, which is shifting the dynamics in terms of how we look at CBT in the region, but still quite a sizable contributor to the market when you compare with other global benchmarks.
And just to give you context, this number used to be 50% 10 years ago. CBT contribution to online retail almost 10 years ago, when I first started looking at this, was more than 50%. So we have come a long way from 50% to less than half of the market. Less than half now, only 20%, 15 to 20% of the market driven by CBT.
Yeah. The third and possibly one of the most interesting things about our online retail market is the contribution of omni-channel retailers to the digital commerce, to online retail. So typically when you look at online retail markets in most emerging markets, the omni-channels account for 10-15% of the market, and the digital natives, the e-commerce marketplaces, the aggregators, the horizontals, those are the players that really dominate. But if you look here, 1/3 of the market is contributed by omni-channel retailers, which is quite significant. And the reason for that is the omnis in our region have been quite prudent in investing in digital infrastructure. They've also leveraged their offline footprint. So you see a lot of click and collect offerings that especially fashion players in the region offer, and that typically accounts for a big share of their online fulfillment also. So they are able to, they invested in digital quite early. They leverage their offline footprint quite well. And they also have a strong brand, which comes really handy in high value categories like electronics and home, where they do well. And also in segments like luxury, which is quite a sizable portion of the retail market in our region. So that's the third bit in terms of how our market is differentiated. Omni-channels drive 1/3 of it, which is again quite higher when compared to some of the global benchmarks. And that brings me to the final sort of point in this slide, which is that we are home to one of the most democratic e-commerce markets in the region. So typically when we have these discussions with people in the ecosystem and ask them, what do you think is the share of the top 3 players, top 2 players in online retail, the number we get is always a bit high, 50%, 60%. But the actual number, as you can see here, is around 30% across UAE and KSA. And the reason is the 3 charts that we discussed previously in this slide, right? So we are home to a very distributed market. There's not a lot of concentration among a few players, and therefore we feel that it is one of the most democratic online retail markets going around globally. So next we wanted to talk about a few of the business models that exist. We've put some logos in each of these boxes to clarify which companies, what type of companies we include in these business models. Obviously these are not exhaustive logos, there are more companies that exist. And the idea of this slide is to paint a picture of how the market is moving over the last couple of years. Again, in UAE and KSA, we're focusing on UAE and KSA in this slide. The arrows depict the market share moves. So an increase is in green, decrease is in red, and no change is the stable yellow color. So the major mover among all the business models, as you would expect, is the hyper-local players. The quick commerce segment has seen significant scale up over the last 2-3 years, especially in UAE, and now that's playing out in KSA as well. So that's a segment that's gained significant share. And what that means is omnichannel horizontals, which focus on grocery, faced a bit of pressure as the hyperlocals scale their grocery offerings. Within omnichannel specialists, like I mentioned earlier, players in the home segment, players in the electronics segment, they've been able to provide very curated offerings. In electronics, there are a lot of exchange offers that they give, service offerings that are provided. Home is a category that requires a lot of experiential elements that the traditional omnichannel home players have been able to fulfill. So the high value categories within omnichannel specialists have been doing relatively better. While in other categories like fashion and beauty, omnichannels have been facing a bit of pressure from the CBT influx over the last few years. If you look at retailing horizontals, the marketplaces of the world like Amazon, Noon, etc., they have remained relatively stable. They went through a period of less discounting and promos where they lost a bit of share, but now they've gained it back. And overall, over the last 2 years, they've maintained a stable share across the last 2 years. In specialists, I think it's a mixed story. So specialists again is where we saw a lot of influx of CBT coming in. So fast fashion picked up in a big way over the last couple of years. The trend of growth of CBT has stabilized this year, but the last couple of years have been where CBT players have gained a bit of share, and which meant that there was a bit more competitive pressure for the other specialist players within e-tailing. So that brings me to the end of the second section. The third section
maybe
is...
quickly.
Yeah, sure.
Maybe quickly, if there are any questions, I saw someone raise the hand. If there are any questions, please type in the Q&A, and either during the session or at the end of the session, we'll take those questions. But please, we're happy to take questions. Just type them there in your chat.
Yeah. So moving on to the next section, we'll take all the questions together at the end. What's the interesting part of this section is that the growth story for online retail is far from over. There's still a long way to go. But what powered growth in the previous 5-10 years may not be what powers growth in the next 5 years. That's the whole crux of what we want to talk about in this section. The first slide is to give you some context in terms of where some key countries in MENA land in terms of online penetration of retail when compared to benchmarks. So the first big message here, if you can see the black or the blue dot, that's the MENA penetration and how it evolved from 2019 to 24. So it used to be around 3-4%. Now it's around 9-10% in terms of penetration. So around 7% increase in penetration in the last 5 years, which is massive. The pandemic really helped in that increase. And markets like UAE and KSA have been at the forefront of this gain. So in UAE and KSA, penetration would have increased by as high as 9-10%. So it's a period where a massive increase in penetration happened. However, if you contextualize it with some of the leaders and global benchmarks, there's still a lot of headroom in terms of online penetration growth that exists. And it's also not the same story across markets. So if you look at UAE and KSA, they're a bit more evolved, where a lot of customer acquisition has already played out. So majority of the growth will come from retention and increase in spend of existing customers. While if you look at Egypt and the other rest of MENA long tail countries, their significant acquisition is yet to play out. So there's still it makes a lot of sense to invest in customer acquisition and grow the overall pool of shoppers. So now we'll talk about a few changes that are playing out in the region across some key dimensions. So first is in terms of the consumer priorities. So when online retail started, it was all about value hunting. So you went on to online channels to get the best price, to get the best deal, and also availability. So you also went to channels because they had your preferred products. And there was also exclusive launches that used to come, especially in the case of electronics in the online channel. So a lot of the drivers in terms of consumer priority was price and availability. Going forward, not to say that price and value will not have a role to play, it will always have a role to play, but that won't be the tiebreaker between platforms because consumers now value convenience a lot more. So what they want is quick delivery. They want products to be delivered extremely fast, and they want a lot of wide variety at their fingertips. So to be able to search and buy products, quickly and buy products across the long tail of categories. That's what they want right now. So investments in terms of convenience-led, last-mile fulfillment, figuring out the assortment depth required to solution for the variety need of consumers, etc., is going to be important for the next leg of growth. The next aspect is the consumer mix itself. I think Gen Z is a term that people use a lot and has been spoken about a lot, but it is an important point to highlight, which is why we put it out there. So in the last 5 years, in terms of the spend towards online retail, 80-90% of the spend would have been from Gen X and Gen Y cohorts. But over the next 5 years, 5-10 years, Gen Z will start figuring prominently. They will drive 30%, 40%, let's say, of the spend, and alphas will start influencing the spend of the older generations. And these cohorts are very starkly different when it comes to comparing them with the earlier cohorts. They're very digitally native, they're highly engaged on social channels, they like content, they like gamified experiences, they care about sustainability. So there are very different facets of their behavior and what drives them to purchase and what drives them to choose different retailers. So it's important to solution differently for them and catch them young so that you can tap into the consumption that happens by these cohorts over the next few decades that's time to come. Yeah. The third bit we wanted to talk about was the shift from acquisition to retention. Again, this is a two-part story. So, but at an overall level, in the more mature markets like UAE, KSA, and most of the GCC countries, a majority of the growth, we do this analysis called growth anatomy. What it means is what is the percentage of growth that is contributed by acquisition of new users, and what is the percentage of growth that is contributed by increase in spend of existing users. So when we did this analysis for UAE recently, what came out was 80-85% of the next 5-year growth will be driven through increasing spend of existing users, and only 20% would be driven by new user acquisition. The comparable number in Saudi was around 60% in terms of contribution of spend increase. So in a lot of the mature markets, it is important to retain customers and drive more spend for the customers, and therefore subscription programs, loyalty programs have a big role to play. Super apps are well placed because they have a plethora of offerings and they can lock in consumers in that sort of ecosystem. And even omnichannels who have strong loyalty programs that have been playing out over a long period of time are well placed when it comes to keeping customers loyal and driving more spend from them. In terms of category growth, I think in the earlier slide we spoke about electronics and fashion being the drivers of online retail. At an absolute growth level, definitely these categories will continue to drive a lot of growth, but the exponential growth will happen in categories like grocery and the long tail of products that people really don't know where to shop for these products in the offline channel. So when they want to buy it, they go online and search for it, right? So those are the categories where we see a lot of exponential growth happening. And therefore, from a supply chain standpoint, grocery requires a very different type of solutioning. High frequency category, cold storage is required, demand planning is very critical. So all these factors need to be looked into to ensure that the growth that's going to play out in grocery and the long tail is captured effectively. So the final point in this slide is on the seller ecosystem. So this is also a very interesting dynamic that people don't often realize. I mean, how stark the contrast is between the online penetration of corporates and SMEs within retail. So corporates typically have an online penetration of around, let's say, 13 to 15%, while SMEs have an online penetration right now of around 2-3%, very low single digits. So it's a huge divide, digital divide in terms of the online presence of SMEs versus corporates. And to really unlock the next wave of growth, solutioning for SMEs is going to be critical to help them get onboarded on e-commerce platforms, to help enable the whole commerce value chain for them in terms of logistics, ad, marketing, etc. And finally, financing, because financing is a critical need and the biggest challenge when it comes to SMEs when they try to scale or build their digital presence. So lending is also another segment where significant solutioning will need to be done, and that will help to unlock the growth that is left out in the case of SMEs. So these changes lead us to a few opportunities which we talk about in the next slide.
I think here we are, the first one in terms of opportunities is fairly obvious. If you are in the region, uh, I think 7 years ago, no one believed that people will buy grocery online. Everyone felt that grocery is a touch and feel category. It has not succeeded in other parts of the world, so it's very difficult. While now, as we speak today, uh, online grocery is already $5 billion in terms of size of the market, and it's expected to grow 4x. So while the online retail market is expected to 2x, 2.5x, grocery is expected to 4x, and will contribute to almost 50% to online retail. So it's a very significant category. We were telling earlier that majority of the acquisition, especially in large markets, has already happened. And now it is these customers now players capturing more and more share of wallet for the customers, and online grocery will be one of the big categories which will help do it. The second one that we believe is the impulse behavior. So 10 years ago, if you order something online, you would have got it maybe in 1 week, 1.5 weeks, because cross-border CBT was very large. It was very acceptable to get products in 2 weeks or 3 weeks. Weeks was the definition, not even days. Then it slowly became days, and now we are talking of minutes. So if you order on a Kareem or a Noon or even now Amazon Now, right, you will get a product in within 30 minutes or within 1 hour. So and customers want this at this point. They are impulse buying is increasing, and we think that a lot of long tail categories will emerge and go quick rather than it being only driven by food delivery as a category. This also, in fact, we believe that the quick retail category will grow even faster than online grocery category, and we believe it will be a $25 billion opportunity in the next 5 years. Now, with grocery and quick retail becoming so big, the enabler ecosystem, which is logistics, becomes very important. So for these for quick retail, you have to be close to customers, and so dark stores are very important. Noon, Ninja in Saudi, they have significant presence in dark store business. Talabat and Kareem are opening significant number of dark stores, but there are also enablers where someone like EMX is partnering with Amazon now for dark stores to provide dark store as a service. So we believe that dark store as a service can emerge as an important category. Bulk storage has been there, but now it becomes even more important with digital growing so fast. Micro fulfillment is sits right in the middleware where it is close to the customer and it optimizes on the logistics. So micro fulfillment like Salasa, Navel, we believe those are also is an important sector. And emerging sector also is pickup lockers. In the West, it is a lot more popular, while it is still emerging in our markets. Side, but it's not just this, right? There are other opportunities also that we think will come. Now, why one of the important elements we think on this whole SME enablement or digital becoming large is how has the digital media played an important role in this. So currently, if you remember, we were talking of $500 billion retail market. If you look at the influence of uh, on consumers, on which channels influence the most, and we asked this question where it included newspapers, TV, and all the digital media channels. Two-thirds of the influence was from digital channels. So two-thirds of MENA retail spend right now is influenced by online channels, and one-third is influenced specifically by social media, which is around 120 billion. So while the online retail market is much smaller at uh, but the influence that it has, especially from a digital social media perspective, is very, very large. And that also means that discovery becomes a lot easier. You don't have to spend on TV ads, which typically tend to be very, very expensive. And smaller players now have much more opportunity to be discovered. And the fifth opportunity that we wanted to talk of, which is SME enablement, uh, social media is a very important enabler for that. So currently, Akshay was talking earlier that large corporates, the online penetration is much higher, but for SMEs, it's a sliver. They are not digitized at all. And the addressable market there is 200 billion. So it's a very, very large addressable market. And we are seeing a lot of enablers now, while social media like TikTok, Facebook, Google, they play an important role in discovery and now also closing the trade. But there are enablers that are coming in, which like Shopify and the local equivalents, which help in digitizing these SMEs, and that's a very massive opportunity. The and finally, the last one we wanted to cover was the lending. Working capital is when we spoke to SMEs and we did a survey, working capital and need for capital and timely payments was a very critical enabler for growth of SMEs. And this was a very large gap in the market. Our estimates are that the gap is north of $150 billion in terms of just this. And we are seeing now a lot of funding being raised for this. Lendo is one of the leaders. Beehive in UAE is another player for us. A lot of players now are trying to fill this gap and support SMEs in managing their working capital. So these are obviously there are a lot more opportunities, but we think that these are six significant high growth opportunities that we see in the market at this point of time. This, so we also do a newsletter, and this is a weekly newsletter that we do. This newsletter where we cover the key trends in the digital economy. It goes on Wednesday morning. So if you want to subscribe, please drop a line to us, or you can just scan the barcode. We also cover the latest reports in that report, in that newsletter. Let me see if there are any questions. Okay, are there any questions that you see?
Yeah, there are. So there's one question on why is market concentration so low, and it seems very fragmented. So, I mean, I covered a lot of points in the slides that we discussed, but just doubling down on one key aspect, which is the omni-channel presence itself. So when I say omni-channels are pretty strong, it's not limited to one or two categories, but they have a sizable presence across different categories. So if you look at grocery, Carrefour is quite strong and has a sizable presence. In beauty and pharmacy, you have players like Sephora, you have Al Nadi that have double-digit share of online coming in. In electronics, you have Sharab DG, you have Jareer Extra in Saudi. So all of these players have a significant. I mean, most of these players that I mentioned have double-digit share contribution of online to their sales. So one of the biggest reasons for the market to be fragmented this way is the fact that we have strong omni-channel presence across the key categories of retail. I mentioned a few examples here. But apart from that, the fact that we have a good presence of different categories, it's not concentrated in electronics or only in fashion. We have a distribution of a lot of different categories, which also brings in more and more players into the market. CVT has always been high and continues to be high. So all of these reasons are why we see more of a fragmented market in our region.
The next one maybe I'll take is how do you see new players, example, Kita joining the region in terms of its, is it purely share gain or do they accelerate penetration? And a sub question to that is it different in KSA versus UAE? So I think this is more on the food delivery side, and Kita is entering into grocery also in Saudi. But I'll take a broader stroke to answer this. The first question, new players coming in, does it accelerate penetration or it's purely a share gain? What we have seen, especially in Saudi food deliveries, it has accelerated penetration. So delivery fee, which was a big barrier for entry for a lot of customers, when delivery fee reduced significantly, then a lot of customers who were earlier not ordering started ordering. So it did result in acceleration of penetration. Having said that, there is a limit to where it can go. This is the first quarter in food delivery where in Saudi, the market actually declined. So there is a limit to discount-based promotions and how much it can grow based on only discounts. So we do think that there's limitation to that. Is it different in KSA versus UAE? We do think that KSA, the drivers were slightly different in terms of the structure of the market and also in terms of what the subscription penetration for players was. In UAE, the subscription penetration is already very high. So we expect the impact to be different in lower in UAE compared to KSA.
Yeah, there's a question which says, will marketplaces remain dominant or will social and D2C models take over? So I think in terms of scale, marketplaces will always be quite sizable and dominant. And as you'll be noticing, the leading marketplaces like Noon, Amazon, etc., have been, I mean, their business models have been evolving towards quick, towards larger category mixes. So from a scale standpoint, they'll still remain quite significant, but where we see exponential growth from an investment standpoint or from a very steep growth standpoint, that will be D2C and social commerce. And we already see some bits of seed funding and Series A funding in a lot of D2C startups in beauty and personal care, fashion, even electronics categories. So that story will definitely play out, but in terms of scale, the marketplaces will remain dominant. And social commerce will not just be limited to social commerce players and others. We think social commerce is kind of an enabler. So even the marketplaces will invest and create their own creator programs, and marketplaces will also have a significant role to play in driving the growth of social commerce.
Maybe we can take one more, there are a few more. What is this? What will the role? Are there opportunities in any niche segments since marketplaces are scaled up? Actually, you want to take this?
Yeah, sure. So niche segments, there's this concept of super verticals where there's more specialized solutioning that is required. Examples could be, say, health and supplements, where there's a lot of demand also from consumers. And there are very specialized players in the West who provide health and supplements. iHerb is one example, who are quite prominent in our region as well. So that is an example of a category where super vertical focus is required, and you could see some scale up happening. Meat and seafood could be another example of a very specialized category where you could see super verticals emerging. There's also, I mean, our region is home to a very huge luxury market, and what that means is pre-loved or re-commerce, as we call it, is also a segment where a lot of solutioning can be done. So there is strong demand for pre-loved luxury products, and right now there are a few players who are solutioning for it, but the scale at which it is right now, we think there's a lot more growth left over there. Yeah. Sandeep, I think you're on mute. If you're saying something.
There are a few more. Yeah, there are a few more questions, but for time constraints, maybe we'll take it offline. Please reach out to us if there are questions. Happy to take. But thanks a lot for joining.